with good earnings, Wells Fargo and Morgan Stanley, better than expected news, and the market has now turned around back in positive territory.
No, that's right. We had quite an interesting day. We started slightly up and then gradually went worse by the minute. And then, as you said, as soon as the Dow opened, then we had news out from the States with Morgan Stanley beating their estimates, and also Wells Fargo. And Wells Fargo, as you know, one of the largest shareholders is Warren Buffett. He's Berkshire Hathaway. So the market got a hell of a lot of comfort out of that, and we saw the rebound to end the day positive. So good news out of the States.
Let's focus on local stocks. Pick and Pay coming out with results. HIP's up 11%, and we're sitting today at 40 Rand 45, up almost 2.5% on Pick and Pay's front. Relatively defensive, being a food retailer. Well, very defensive, being a food retailer, but expensive at these levels in your view?
Yeah, I think that's something that's 100% right. As you say, their first half earnings were about 98, 99 cents. If we plug that into our models and we're looking for a full year figure of about 238 cents, it's going to be very tough for them in the second half. It's almost 40% improvement on the first half with food inflation coming down. So yeah, it's a tough time ahead for them. But as you say, fully priced at the moment.
And Michael, Old Mutual up 2.5%, 13.95, obviously benefiting from the positive news flow around financials, as you mentioned, Wells Fargo and Morgan Stanley out with better results in the US. As a house, you are positive on Old Mutual though, aren't you?
Yeah, we're still positive on Old Mutual. I think you raised 2 points. Firstly, obviously Old Mutual as a business is geared to the equity market. So with the phenomenal rise we've had in the equity market since March, that's obviously going to feed through to their valuation and to their business. But as you say, at the moment, we still see an embedded value in excess of 19, 20 Rand. They're currently trading at 13 odd Rand. So still a 30,
big discount to that embedded value.
A 30% discount to that embedded value. So there's still some value in Old Mutual.
Vodacom out with a trading update yesterday that took the market by surprise, and the HIP's down, they're saying between 10 and 20%. That's for the year to the end of September. Is this a stock that you've been looking at? Did it catch you by surprise?
The trading update was a bit of a surprise. I think on two fronts, on the earnings front and also that write down in Gateway.
3.2 billion Rand.
And that's a big number. And at the moment we don't prefer Vodacom. In fact, we prefer Telkom at the moment. We think there is better value in Telkom. It generates phenomenal cash. But obviously the key risk to Telkom, and your previous guest did mention it, is the ability for management to maximize the capital that they've invested in that business.
The market at these levels, let's get an overview from you, considering much of the debate at the moment is about whether we can continue in a bull market. Is that 30,000 point level in sight? Beyond that, do we see 33,000 points, or are we coming back quite dramatically?
I hope you're not asking me to forecast.
No. I put it very succinctly, didn't I?
At the moment, yeah, if you have a look at the P on the market, it's roughly around 14.5 times, which is above its long-term average. But we would rather look at the Graham and Dodd PE, which takes a longer history, 7 years, and normalizes the earnings to get a normalized PE. And that at the moment, the Graham and Dodd PE comes at around roughly about 13, 14 times. But the long-term average of the Graham and Dodd PE is in the region of 16. So for the market. So
the market's not expensive in your view at these levels. Can I say that?
It's not expensive. We'd say it's, there's moderate value at the moment. It's not the value that it was, certainly not 6-7 months ago. But at the moment, there is still some value in the market.